All right, y'all. What's going on? What's going on? What's going on? Welcome, welcome, welcome. Let me actually fix this real quick here. All right, y'all. What's going on? What's going on? Alrighty, alrighty, alrighty. Cool. Well, welcome to the call, guys. Super excited to be here for another edition of Sunday Market Outlook. Super grateful as always to be connecting with the squad and just getting you guys prepped for a new week of trading. So we're gonna allow everybody to kind of get on here over the next few minutes. But I hope that you guys are doing amazing. Happy Father's Day to all the dads out there who are enjoying time with family and whatnot today. And yeah, man, we'll keep this pretty simple, pretty short for today, just because I know we got actually other trainings running with some of the big leaders out here in Akashex, and it is a holiday ultimately. Currently out here in Miami. Before we head out to Colombia over the next week. So a lot going on. Expect a lot of content on the channel as well from all the travel that we've been doing. But yeah, man, it's been a while. I want to obviously get back into the groove with Sunday Market Outlooks. It's kind of been a little bit on and off just because of travel and just a lot of stuff going on at the same time. But yeah, man, again, we're here looking at a brand new week in the markets, halfway through June. And yeah, man, we're almost halfway through the year as well. Over the next 2 weeks, we will officially hit 6 months into 2025. So definitely want to take advantage of, making sure we're all on the right foot and taking advantage of these markets. All right. So, what's up, Gabriel, Laura, Albert, Eglantine? Hope you guys are all doing great in the chat. Appreciate you guys for being here. So, without further ado, let's get straight into it, guys. There may be some of you who are in Akashex. Maybe some of you guys are not in Akashex. For those who don't know, Akashex is our private mentorship program where basically we are connecting with not just myself, but our entire team of expert traders who have been doing this for years and years and years, giving you guys, great content, live sessions, trade alerts, everything. So for anybody who is not a part of the private mentorship program, these calls are really just to really give you a little bit of a taste of the value that we give on the platform so that you guys can make the decision to actually get fully involved where you're going to have the full access, to our system to ultimately create another source of income and really just elevate your life with the industries of day trading and networking. So, with that said, let's get straight into it, guys. We're going to look at NAS 100. For those who know, you already kind of know the deal. That's my main and only really thing that I day trade at this point. For those who are newer, this is a asset class that I think is an amazing way to trade as far as looking for big moves in the market, fast moves in the market, and to each their own. There's a lot of people that trade things like commodities such as gold and silver. Some people lean into Forex. Some people really love the crypto world. I do dabble a little bit more on the crypto side as well from a long-term investment standpoint. I even own a couple of stocks that again are more like long-term plays. But as far as day trading, I really love NASDAQ, aka NQ, NAS 100. A lot of many names, but yeah, man, it's just an amazing asset class to trade, especially with the current conditions and the state of the world right now, where technology is really the hottest thing out there. All right, so for those who don't know what NAS 100 is, guys, this is basically going to be a compilation of a lot of different technology stocks, but there's really seven that kind of dominate everything. Companies such as Nvidia, other companies that you for sure know, such as Apple, Microsoft, Meta, which owns Instagram, Facebook, WhatsApp. Pretty much just everything that dominates world technology is what we're trading all in one group known as the NASDAQ. Okay. So very important to understand what we're actually trading, so that way we are not, caught on our heels or lost or not fully understanding what it is that we're doing. All right. So the first thing we would like to do at the beginning of every single week, and that's why I like to run these calls, is not just for you guys, but it's also for me, right? To be able to keep the habit of not stepping into the market on a Monday and not really having a game plan, not really knowing what we're looking for the first days of the week, or really just overall weekly picture. You got to know what type of news is coming out, what type of world events are currently happening, if there's any earnings reports for some of these big companies, again, such as Nvidia and Apple. It's just a lot of prep that you have to do at the beginning of the week if you really want to stay one step ahead of the market. So ultimately, I never know what price is going to do. We don't control what price is going to do, but we can prepare as much as possible for the different type of outcomes that we could expect. And that way we can get into execution mode instead of scrambling and hoping that we can align ourselves with the bigger picture. So again, for whatever you guys do, regardless if, you guys are trading gold or whatever you're trading, like have this process before you start your week because preparation is everything, right? You've probably heard something called the 5 Ps. The 5 Ps are proper preparation prevents poor performance. I'm gonna say it again. Proper preparation prevents poor performance. So just stay ready, okay? Now let's look at a little bit of the news side of things, right? So there's three different types of news that we're really looking to pay attention to. Number one is gonna be your financial news, which is like your planned news. Give me 1 second here, guys. Alrighty, sorry about that. So three types of news that we want to focus on, all right? Number one is going to be the planned financial news, such as understanding what's on Forex Factory, for example. So you have your, NFP, CPI, unemployment claims, FOMC, just kind of like the major financial news that is scheduled, right? That we can expect week after week. So if we start off with that, we're going to see that Monday we don't really have any significant high impact news. We really start seeing that on Tuesday, where we have retail sales at 8:30 a.m. Eastern. Let me start switching this to Eastern because some of you guys may know, but I'm actually moving back to Miami over the next like month or less. So I will officially fully be back operating under Eastern time zone. Where's Eastern? Okay, here we go. So yeah, I've been obviously in Texas for the last several years, so kind of bouncing between going from Central Time to Eastern Time now. So 8:30 a.m. retail sales. We have unemployment claims Wednesday in the morning as well, and then we have FOMC 2 p.m. on Wednesday. So really the biggest thing is going to be Wednesday. Okay, Wednesday we're going to have unemployment claims, and then we're going to have FOMC. So Wednesday is going to be like that superstar day for the markets, and it doesn't mean that we can't trade Monday or Tuesday, but we have to be very mindful that if the market is a little bit slow or consolidating or whatever the case may be, it's not going to be a surprise, at least to me, simply because a lot of times before we have a major news event such as FOMC, we're going to see liquidity build up. We're going to see a lot of indecision or what is appearing to be indecision in the markets just to really kind of build up a lot of orders on both the buy side and the sell side. So that when news comes in, we can see that, big spike, big manipulation, and just kind of multiple change of direction that can pretty much take the money out of the, dumb money and transfer it over to smart money. So it's going to be really important to track how, the market builds up into Wednesday. Sometimes we do get big moves prior, but I'd say from a probability standpoint that Monday and Tuesday, don't expect a lot. We can still trade our strategy. We can still trade our confirmations and we can make the most out of what we get. But ultimately, we can't force the market to make a move. Obviously, we just play off of what it's giving us. So after Wednesday, we'll most likely get a lot more reaction. And then Thursday, we actually have a bank holiday. Um, I believe this is Juneteenth. Okay. So Juneteenth is kind of a holiday that was introduced, I think, like 2 years ago, maybe a year only. I think it's like 2 years now. And there's certain news events that are gonna definitely shut down the market for sure, such as like Christmas, New Year's Eve, things like that. But as far as Juneteenth or like Columbus Day, there's just certain events where you could actually see the market move a little bit more. So I think Juneteenth we probably won't get that much of a halt in the market. You probably will see some moves, especially that we have like post FOMC that day. So just keep an eye on that. So that's a little bit of the financial news side of things as far as what we can expect. The second thing we could look at that's also somewhat, which is basically planned news as well, but is gonna be the earnings reports for the big ones in as far as the companies that make up Nasdaq, right? So the two earnings reports that I really want to pay attention to always are Nvidia and Apple. Okay, so there's different ways you can check that. You have like Seeking Alpha, for example, that you can go and you can see the upcoming announcement dates here. Okay. You can also really just see it on the trading view chart. If you go to Nvidia, you guys will see that towards the bottom, there's like a E and there's a D. So you got dividends, and then you got earnings. All right, so the next earnings report is actually not for a while. You'll see earnings right here. It'll say Wednesday, the 27th of August. So we don't got to worry about earnings for quite a while as far as Nvidia goes. Apple, we have our next earnings July 23rd. So we don't have to worry about earnings reports for those two main titans of NASDAQ for a while. Again, it's not something you got to check often, but this is something you want to have in your calendars if you're trading NASDAQ, just so you don't get caught on your heels. A lot of times I'm not really trading post market anyways after 4 p.m. But, sometimes you could be in a position that you're looking to hold, maybe from a swing trading perspective or intra-week perspective. And if you don't know that these news events are going to happen towards post-market and you're going to get caught nasty, right? And those earnings always drop around like 4 p.m. So it's kind of like right as the market's about to close, that last hour of the day. Excuse me, just hold on. Got my dog freaking out over here. Alrighty. So as I was saying, guys, earnings are going to be super crucial to pay attention to, and we don't have to worry about it for a while. So we've already gotten the weekly news kind of figured out. We got the earnings reports for the major Nasdaq companies figured out there as well. And obviously, if you're trading gold or forex or whatever, then you have to do the other aspect of checking news, such as like if you're trading, euro or the pound or the yen, then you need to be a little bit more involved with what's going on that side of the world. Okay. It's easier for me to trade NASDAQ where I'm just focused on the US dollar and then focused on the earnings reports for these major companies that make up NASDAQ. So you got to know what you're trading. Okay. When it comes to something like gold, for example, man, that's like a world, it's like a world asset class, right? So a little bit of everything can affect gold, but mostly the US dollar still to this day. And global conflict is a big thing as well, which is what we're going to head into now for the third thing that we check for as news goes. And, the first two things are more planned, right? It's scheduled financial meetings and reports and numbers that come out. But world global news and conflict is something that is on the fly. So you have stuff like Donald Trump tweeting, like Donald Trump's tweets with the tariffs and China were something that, is something you have to kind of follow up with, whether you turn on post notifications for Twitter or if you're just in the know with social media, because that stuff is going to make the market move big time. But I think that era of, the tariff talks and all that is kind of already smoothing out as we've seen over the last, week or so with agreements and just kind of like that desire on both sides to just kind of want to move forward and just get business done. But what's happening right now is we're seeing the conflict between Israel and Iran. That's obviously impacted the market big time. We saw that we had on Thursday in the evening, we had a massive Asian range that was caused because of the global conflict. So we saw a market really drop big time during Asian range. So typically, okay, and for those who know the strategy, kind of already understand what I look for. We're looking at an Asian range and then looking to play off of that range as we step into New York session and maybe even London session if you guys trade at that time, but mainly New York. And typically you can see the last couple ranges from Wednesday was about 1,000 pips. Tuesday was about 1,300 pips. Monday was about 1,500 pips. And then Friday was, or sorry, Sunday heading into Monday was about 700 pips. So typically anywhere from 500 to 1500 pips, somewhere in that vicinity is kind of like a more average Asian range. Really just depends on overall market conditions. What we really want to say is that Asian ranges are supposed to be small, pretty tight, and something we can exploit a lot easier. But with the Iran news and everything, we saw a much bigger Asian range form. This was about 4,000 pips. Okay. So we have a range that is like 4 times bigger than average, at least according to the last week's average, right? So, part of the reason why, if you guys are in Akashics, I ended up calling out a trade alert recently. I'll show you guys that. I usually cover setups and trade alerts from Akashics really like on the live sessions. But we didn't have one on Friday, so I do want to kind of just take time to talk about this setup here real quick because it does kind of leak into what I see moving into Monday. Is just a continuation of the thought process that I had from that day. But essentially, if you were in Akashics and you guys saw the trade alert that I last called out, we had a NAS buy right here, basically entering off of 21,480 area. So it's a lot to kind of like, there's a lot of good stuff, from this trade to learn from. And that's what I like about trade alerts. Honestly, obviously, trade alerts helping you guys make some money is super cool. But I like to be able to send the trade alerts as a learning tool as well for you guys to understand why we take some of the setups that we take. Okay. So if we actually zoom out to about a 1 hour chart here, okay, couple reasons why I ended up taking this trade. Number one is whenever we know like Asian range is typically like 1,000 pips or less, right? Let's say on average, maybe a little bit over 1,000, but anywhere from 500 to 1,500 pips is kind of like the total like range. Whether we have more volatility, then we'll lean more towards 1,000 plus. If we're on the lesser volatility side, we'll be like between 300 to like 800. But at least from 500 to 1,500 is definitely like a very broad, safe range to kind of assume. So if we're at 4,000 pips, like this is the problem with doing Zoom at family's house, guys, but we out here. Alrighty, so 4,000 pips is more than the average by a landslide, right? So I don't usually like to do anticipation, and this is why this is just one of the reasons why I got into this trade. But if we saw the Asian range start around 21,870 and about an hour, basically 2 hours passed by where we just saw the market tank 4,000 pips, there is going to be a bottom of that Asian range, obviously. And again, we don't want to try to anticipate because, for example, if you anticipate the Asian range is going to stall out, let's say around these lows for about 1,800 pips, you're going to stall out at 1,800 pips and be like, oh, we're ready to turn around. And price is really not ready to turn around, right? So hold on, give me one sec, guys. Alrighty, guys, sorry, just wanted to relocate here a second. So again, we don't want to anticipate or just only rely off anticipation that 1,800 pips is going to be where we maybe reverse from, right? So don't use that as your only tool. But by the time we had already reached around 4,000 pips, at some point we got to find the bottom, and 4,000 pips is already really, really far pushed compared to what we usually get. So right around here, we should see a turnaround. So that's just one thing that I was thinking about when I looked at that trade. The second thing is looking at areas of supply and demand. Now, supply and demand is like, there's ways to teach it, but sometimes people have their own perception or like what they personally see. So what I'm going to show you is this, right? We want to look at the major swing highs and swing lows of, for example, this entire range leading up into the setup. So for example, when we were like all the way over here, okay, this is when we just started moving the Asian range. I want to look at this picture and I want to find the highest points and the lowest points. So for example, we can see that we had this high point here, and then we had this low point here, and then we had this ultimate high point all the way over here. Okay. So I'm going to delete this real quick, and I'm going to delete this. So I know a lot of people are going to see like these highs and this low and this high and this low and this high. All right. And this is where market structure for like some people is confusing. I just want you to focus on the most major points. And the most major points are where you have this high that pushed all the way down here, and it made its new high all the way here. So all this stuff in between are just points in the middle. But the major points are here, here, and here. Okay, so knowing that this is the range that we're kind of dealing with, I want to look at if price is going to continue higher, for example. Where is the last area where price kind of manipulates against us and then creates the new high in the market? So for example, if we're in a bullish structure, you're going to have like a low, price is going to come up, it's going to make a pullback, and then it's going to make a continuation, right? This is an uptrending market. So if we look at it that way, we're going to say, okay, we had this high point, price came down, and then we had an expansion to make a new high. So this point is the last like lower high, where if price is going to continue bullish, we can expect price to react off that lower high and make a new higher high, for example. And if we look at what's the last wick that was created that pushed against us, as far as like if we're bullish, what's the last wick that went bearish before price turned around? And if we actually look here, you're going to see this wick right here. So we're going to mark up this wick where price opened this 1 hour candle here and came down. And we're going to use, let's say, this, right? So again, you can see the candle opened here, came down to here, and ended up closing here. So this last little wick where price came down and then exploded to make a new high is my point of interest. So essentially, whenever we can get price to like come back into that wick, we could see a big reaction potentially from there. Okay. So this is like your area of demand. So now we have two things that can support this trade idea that, you know, would make me want to go bullish from here, where we know that we had this high, price made this low, and after that low was put in, if the market was bearish, you know what would have happened? Price would have made this big pull up here, stalled out like how it did here, and respected this high to come lower. Because remember, a bearish trend is going to have, let me delete this. A bearish trend is going to have a high point that comes down, pulls back, and makes a new low. Okay? But what we have is this, where price made a high, made a low, and then price looked like it was going to start to make its way back down, and it ended up making a new high. So in reality, this little section of price that maybe somebody thought was bearish, where they could have sold and made a new low, didn't work out. It just made a new high. So now when price comes down, this lower high, this was bullish. It's hard to kind of see that if you don't have a lot of time on the charts. It really is. And sometimes even with experience, you can misinterpret price or whatever, and it's fine. It is what it is. But these are the little things you want to pay attention to. If price was actually bearish from this leg, we would have seen it pull back and then make a new low. And it didn't. It just kind of stalled out and then ended up making a new high anyways. So again, this is that last low point after this high was made that ended up putting in a new high into the market. So when price makes all its little pullback into this discounted area here, it should get at least a reaction to go higher. So market structure wise, we were still overall bullish. we had an area of demand with that wick. And then also we understand that with the Asian range, we don't usually see price extend, more than 1,000 pips. We're like well over that range. Like we're well over 1,000. So that's why I ended up calling out that trade alert. 680 was the entry, or I'm sorry, 480, 480. I usually keep a 500 pip standard stop loss, which basically covers the low, which I like to see. And then basically the targets would be the fair value gaps that were left from that massive drop at the start of Asia. So if we look at like a 15-minute time frame, all right, and we actually like turn off the Asian range for just a second, so you can kind of like see a little bit more clearly the fair value gaps. You can see like these two massive fair value gaps here, right? So the ultimate like target really was like the last fair value gap up here that created that push to the downside during Asia. Because the market will always do two things: look for liquidity and or rebalance itself. So with this big drop that we had, we took a lot of liquidity out of the market, because look at how this area of support was formed here. Right? Do you know how much money is sitting there? It's a lot of money, because you have buyers here, buyers here, buyers here. A lot of support or buyers were there. For the people that trade support and resistance, like, like this was like a super area of support, for example, right? I mean, you could just see it. Mark this up here. You can just see how price really reacted off that area. So, for those people that bought at that area at that time, cool. But just know that at some point, when you have way too much of an obvious support or way too much of an obvious resistance, there's just a lot of money sitting there. And so whenever the market is done pushing higher for whatever reason, and it starts to make its way lower, this will be the first thing it's going to gun for. So that's why you see that massive push to the downside that ends up taking all that money out of the market. So now that liquidity is out of the equation, what is the next thing that the market could look for? Well, it could look for more liquidity, and that would be in the form of like a low. So for example, this low right here is liquidity as well, right? There's liquidity there. So the market could literally just run through that as well. And that's why I told people on the trader, I'm like, this could literally just run straight through. So don't use a super high risk or anything, because we're not really trading in like our signature strategy or in our typical window. Like this was an opportunity that isn't common. It was an opportunity that came from us taking advantage of news and a couple of things that we understand about the market to basically finesse a quick entry that had a high upside, but it also came with a lot of risk. Okay, and that's the game that we always play. So typically I try to stick to my strategy, as much as possible, like 90% of the time. But there are certain times where you have enough experience and you can spot an opportunity that makes sense and make some money from it. And that's what we were able to do here. So if the market is going to continue hunting liquidity, it would have ended up rating this low, which that's going to lead into my conversation now about where I think we're going to go for the rest of this week coming up. But at least for the time being, when we came into this setup, an overextended Asian range, liquidity was already grabbed, and we were tapping into a demand zone. So a lot of stuff that made me feel comfortable with taking a buy there. And then the target is to rebalance the market, because again, the market's either going to seek liquidity and or rebalance itself. So if this trade wouldn't have worked out, it would have been because the objective was to go and grab this liquidity instead of rebalancing first. At some point, we were going to rebalance regardless, whether it was going to be bouncing off of here and rebalancing or taking the liquidity and then rebalancing. It was going to be one of the two, because the market has to do those two things. It's just a matter of when, like the order of operations, like which one happens first. So the cool thing is when you guys study liquidity and fair value gaps, it really gives you a real deep understanding and confidence about where the market's going to go next. From that point, it's just hoping your stop losses hold up and that the order of operations, whether liquidity is going to go first or rebalancing is going to come first, that you get it right, basically. Okay. So yeah, man, basically the anticipation of this area is why we called out this trade. And then eventually we got that reaction. And then the market ultimately, whoa, ultimately ended up coming into that fair value gap there. And now we're here. So the precision was most definitely there, 100%. The entry was super solid, ended up running for a good amount. Even if you would have gone like, let's say 2%, which is what I usually tell people is like a good thing on average for most of your trades. If you can just at least make double on your wins and your losses, then you're in a good spot. And so even if we cut ourselves short at a 2% win, that's not bad at all. And it ended up running for well over 6 times the risk, basically actually 7 times the risk, really, if you really would have perfectly managed it. And we're not always going to perfectly manage trades. I didn't perfectly manage that trade either to get it to the full extent. But regardless, it's the proof of concept about why I teach the concepts that I do and how they can help you get a clear, understanding of what the market's trying to do. All right, so let me check the chat, see if you guys have any questions or whatever the case is before I get into like the final kind of breakdown of what I expect next, heading into next week. So let's check that real quick here. Tap to trade. Okay, so for the people that ask about TTT, so some people that are newer, if you don't know what TTT means, it's tap to trade. It's one of our signature products and Akashex, where we basically have you guys hook up an account to the back office, and if I call out like let's say a trade, you guys can approve the trade and it'll be like taken on your account and then managed by the educator. We do not have tap to trade configured for indices. What you got to understand is that tap to trade right now is on Forex and gold. And to give you an idea, an average stop loss on a Forex pair could be like 10 to 40 pips, something like that. And an average stop loss size for gold is usually between like, I don't know, 20 to 100 pips, just depends. With my NAS trades, I literally have a 500 pip stop minimum. So my stop loss size is usually like 10 times or more bigger than the average Forex trade. Now, for somebody that doesn't understand how to calculate, how to position size, you may hear that and be like, oh, um, why do you use such a big stop loss? Or why are you using that much risk? But at the end of the day, I'm not using more risk than somebody trading Forex. I just use a different position size. I use a much smaller lot size, for example. So if you take a Forex trade or a gold trade, you may be using like one lot size or a 0.50 or I don't know, whatever, right? And then on an index like NAS, you're going to use like a 0.01 or a 0.05. You're going to use much smaller sizes because the range is much bigger. At the end of the day, it always comes down to risk to reward. Until you understand that, you're a scrub at trading. I'm just going to call it what it is. Like until you understand that, you don't know enough yet. It's all about what do I risk and what do I make every setup. It doesn't matter if you risk 10 pips to make 50. Risking 10 pips to make 50 is just as good as risking 100 to make 500. You look at the number being higher, but ultimately it's what do you risk and what do you make every setup. That's what defines a good trader. I don't care if you win 8 out of 10 times. If you're winning 8 out of 10 times, but you only make 1% every time you win, and you lose 1% every time you lose, you're not going to do better numbers than somebody who wins 50 or 60% of the time, but they make 3 or 4 times the amount every time they win. This is basic stuff, but there's a lot of people that are obviously in the beginning phases of trading that don't understand. So that's why I take the time to make sure you guys do understand that. So like this trade alert that I call that gives you a really good entry that barely goes into any drawdown and then runs for up to 7% return off of a 1% risk. Like that is elite trading, and it's not to toot my own horn because I'm not going to catch setups, like that all the time. But this is what you want to strive for. You want to strive for setups that give you clean entries, that give you way more return than your risk. And it doesn't have to be my strategy. It doesn't have to be my style. It doesn't have to be NAS. I don't care. You can do it however you want to do it, but that's what you want to try to do. You want to try to find setups that are clean, give you good entries, and give you, double, triple, or more of returns when you win compared to when you lose. If you can do that, you're well on your way to becoming massively successful in the industry with enough time. So tap to trade again, like they're not gonna change a product for 20,000 people to incorporate a high risk, asset class. It's very risky okay, here's the thing. Tap to trade has a bunch of people that don't know what they're doing. The people that use tap to trade the most are the people that know the least because they come into that product and this platform with the idea or the promise of, oh, you don't have to know anything or do anything, just simply approve and you're good to go. So if you see me doing well with Nas, in your head, you're like, oh, 1 + 1 = 2. You're good at trading TTT on Nas, we're going to make money. However, most people don't know what the heck they're doing. So if they see that they're using the wrong lot sizes, you're going to blow your funded account in one stop loss that I take. All it takes is me taking one 500 pip stop loss, which for me is nothing. But for the average person that doesn't know what the heck they're doing, they're like, oh, I'm going to use the same lot size that I use on Forex. And I'm going to just go and take this trade. And then you throw away your whole account. And okay, one person is one person, but what if 500 people do that in one trade? So it's just a matter of proper education and expectations. And until that is really nailed down heavy, I don't know how we're going to get Nas on tap to trade yet. And to be honest, like, not that I don't care, but ultimately, like, my MO is to teach you. So I kind of like it in a way, low key, that we don't have tap to trade for Nas yet because most people don't even know how to use tap to trade on Forex. So if you can't even get it down pat on Forex, doing something that's much more aggressive is only going to hurt you. Like you can't even drive a car at 30 miles an hour and you want to go and drive a Ferrari. It's just a bad idea. So the faster that people understand how to take the system properly when it comes to Forex and gold, the faster we probably will implement NAS. And it's really not even up to me. Like I'm part of the machine that we call Akashex, but I just play my role. What I do want to see you guys do, to be quite honest with you, is really make noise about us getting a scanner. Because if we have enough attention and enough incentive for, Akashex to push out a scanner, then that would be amazing. Imagine if you can go into Akashex, right? And you can click on the scanner button and you're going to see Liberty Scanner. And it's going to show my chart with my notes and the entries and all that stuff. It won't be like tap to trade, but it's going to be super cool to know exactly where I would want to get in at and why. And you wouldn't have to mark up your own chart or do anything. But scanners cost a lot of money, guys. If I was the owner of Akashex, I wouldn't want to make nobody a scanner unless I knew the return on investment was worth it. So with the 20,000 plus users that we have, we need to have like significant, demand for that product creation. Just business 101. You know what I mean? So the more that we can make noise about this strategy being worth having a scanner, people making results from it. Like I know some of you guys in here right now have already made thousands of dollars trading my strategy, but some people don't know that. Like there's not enough testimonials being spoken or enough like noise being made for us to have like that being pushed. But I know that if we had a scanner for Liberty, it would go crazy. But ultimately, the community is the one that needs to scream for it. Because the community gets what it wants, not me. You know what I mean? So that's what I would tell you. Let's see. How about the war and Trump saying Iran threatening US? So again, like I don't know what the market's ever gonna do. Ever. And if you follow me, you'll be like, bro, that's not even like true because you be sending out, projections and the projections are like almost always eventually like playing out perfectly. But that doesn't mean that I know what's happening. I look at the concepts that I understand and I look at probabilities and I try to put those probabilities in my favor as much as possible. And we do a pretty good job at it. But I don't know what's gonna happen. So On top of that, if you think what I know what's gonna happen with like war, I know even less. Like I don't, I it could literally change one moment to the next. So at the end of the day, we just gotta look at like follow the money, like what makes sense as far as like what the chart is telling us, right? Looking at market structure and looking at where the liquidity is at. So if you notice something, look at how NAS, like we broke these highs, made a high here, made a high here, made a high here, and made a high here. At first, for a while, we have been making like super clean breaks of these highs and just really pushing like bullish, 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 right? But if you notice, like lately, we've kind of really crunched up and slowed down around here. And it's because we're getting close to all-time highs. So make no mistake, I do think that all-time highs are going to get hit pretty soon. I've been saying it all like over and over on the platform. So I do think at some point we're going to have all-time highs. However, we are significantly seeing price kind of slow down here and fail to make new highs as of late. So if we look at, this last high that was put in at like 22,080, once we hit that point, we kind of started pushing down, forming that liquidity. And then really from Thursday heading into Friday, we saw price take that liquidity and kind of react around here. But I like how we kind of finished the day. Like how we finished the day on Friday told me a lot. Because when we come into these fair value gaps, we could have seen price maybe like continue to push higher. And that would have really convinced me that we were going to gun for these highs and then really start working our way into all-time highs. But the fact that we ended up coming into that fair value gap and giving like a really strong rejection leads me to think that as of right now, the way that things have played out, I would actually think that we might be going for some of this sell side liquidity down here. So the same way that we were like targeting highs over and over and over for buy side liquidity, okay? At some point, we're going to see sell side liquidity kind of come into play. Now, whether we will get like, let's say this one all the way down here, or maybe even this one here, that's very ambitious for us to really expect that 100% right now. Even though I kind of do expect this to happen from a gut feeling perspective, I think the one that's safest to definitely plan for is here. So usually whenever we have like a demand zone, so I'll do this like a schematic, right? Let's say that we have this low, right, where price comes up, okay, makes a high here, and then price comes into our area of demand over here. Okay, I'll make this like gray or something. So we have our area of demand here, right? If price touches that area of demand and then makes a reaction and we end up pushing and we make a new high, then we are totally following like the order flow of demand being in control and just continuing to make new highs in the market. Cool. However, if we get a reaction to that demand zone like this, and then price comes up, but it fails to make a new high, and it starts to make its way back down like this, that could be the early signal that price is ready to start reversing. Because again, if we're bullish, we should see this high go. And if this high is not going to go, it means it's going to end up coming back into that reaction point and maybe even taking out the demand low. Something like this. Okay. So this is basically what I would be seeing here, where, let me back this up, where basically, again, we had like this swing low point. This was the high that created the low. So we came here, made a new high, came back into that area of demand and gave a good reaction. But notice how we failed to make new highs here. And we kind of reacted away. So if that's going to react away, then most likely we'll come back into that demand area and kind of take that out. Okay. Now from there, will we continue to push and take out this low? That will be like another question mark for me still. But at minimum, my main idea right now is that based off of, this structure that we're seeing here, I think that, this is the range that we're working in right now. right? This last little low that pulled up, made a new low, price has come into it and now rejected. So as of right now, if the price continues to make new lows and make its way down here, then most likely we'll just run through this. And then once we do that, that's where we got to see how it reacts. If we're going to get like a big reaction the other way, or if price is just going to continue to, print lower highs and whatnot until we take out this low. And then over and over, we keep reconfiguring what price is doing, knowing that, sell side liquidity targets of like these old lows would be the targets if the market has a bearish sentiment. Okay. Because that's where the liquidity is at on the sell side. So if sellers step in to like control the market, which we've kind of seen it already happening over the last couple of days, then if they're in control, where are they going to want to take price? They're going to want to take old lows. These, and then this one, and then this one. After that, again, we have to reconfigure our ideas. But I would think that if I had to blind guess it right away, we could potentially come all the way to take out all these lows and then work our way to an all-time high. Now, that's just a very general, over-the-top idea, but it at least lets me visualize and prepare myself for those scenarios. So ultimately, once we step into like, London and New York today, where we finish our Asian range, and we'll see how the market ends up opening up in the next couple hours. We'll get a lot more information. For all I know, the market could literally gap up like crazy or gap down like crazy because we have had a lot of news happening over the weekend as far as the war. So it would not surprise me if we get a crazy gap to start the week just because of, the heavy impact news from the war and all that stuff. So let me check here. Where can we make noise for the Liberty scanner? Honestly, you can go on the Akash's community chat where we have like the discussion, for example. Like we have the Akash's community discussion. We can type it in there. You guys can go on Instagram and at Akash's and be like, yo, where's the Liberty scanner? Where can we get a Liberty scanner? Like, I don't care. Honestly, could be the chats, could be social media. There just has to be demand. I'm confident in what this does. But ultimately, social proof is what rules everything, right? So unless we get social proof that says, yo, the scanner is what we need, it might not happen. So let's see. I already know we're gonna get one eventually, but like that's just the manifestation positivity side of me talking. But I know that only takes you so far unless we actually get work behind it. So but yeah, we've been trading this strategy and really been making it a staple in the community for Akash's for over a year now. So I think we have enough like testimonials and proof of concept. But now we need to make that final push to make it a thing. But yeah, man, if you guys got any questions, oh, the indicator. Honestly, guys, the indicator thing, I personally don't even really push for it anymore, and I'll tell you why. Because ultimately, like these other indicators I show you guys is already there, and that's why I want to push the scanner. So like if my main focus is getting the scanner. So if we have the scanner, it's like what would be the point of getting the indicator anyways, right? That's the way I see it. Like I want to make sure that the scanner is something that is in-house for Akash's and that is something that we can market too, because a lot of us that want to get like a free membership or want to actually grow, our ranks within the business, if that's like a goal of yours, man, like pushing Akash's is obviously amazing, but a lot of times people rally behind a certain product or behind something specific like tap to trade. Like people that push Akash's really are not just pushing Akash's, they'll talk about tap to trade, right? And so again, for some people that may be one of your selling points or your main selling point. But I think that for some people, they're gonna really like use Akash's and be like, yo, join Akash's, but join Akash's for the Liberty scanner. Because if you have this Liberty scanner thing and you learn how to use it, you can get crazy results, for example. So that's my mindset. It's like I don't want you guys to just have like some generic indicator, to be quite honest, that you still have to like understand how to use it and everything. It's kind of like just use the other indicators that I already talked about for the last year anyways. But like if we push a scanner, that's way different because now the scanner will have the strategy, it'll have my chart, it'll have my notes on it, like it'll send like a push notification whenever we're crossing like a certain point. Like if we even look at the other scanners, I know it's like market closure right now, so you're not really gonna probably see anything. But if you have like an alert panel like that, look at that on the right side, where you have like a 1 star, a 2 star. It shows you the time frame, the entry price. If it gives you like a 5 star score, a 3 star, you get what I'm saying? Like if you have a scanner here that like literally shows you like, oh, we're crossing here, go for a buy, blah blah blah, right? Like that's powerful. So imagine having a Liberty scanner that gives you like the notifications on the side here for like potential, opportunities and whatnot. It's gonna be crazy. But we need to have it. We need to set it up. And you'd be surprised how much a scanner costs, guys. Like this is not cheap to set this up and to keep it running. So that's why I tell you that it needs to make sense. All right. Cool. So unless we have any other questions, we'll go ahead and call it a Sunday Market Outlook wrap up here. So again, from a higher time frame perspective, just keep in mind my overall idea here for now is that we might be going for the liquidity on the sell side around 21,400 area. And then if depending on how we react from there, we could potentially get down to 21,000 and then eventually 20,650. Basically all of these 4-hour lows. These are all low resistance liquidity levels where if we just got enough news, we could see like a massive like drop on NAS, especially with the news. Like I always tell you, the news is just going to be the excuse for the price to get delivered to where the money's at. Always remember that. It's like, I'll tell you like this. You may get invited to go somewhere and you're like, oh, I don't really want to go over there, but I need a really good excuse to like say no. And then something happens and you're like, oof, perfect excuse to say no. That's basically how the news works with these markets. Like, you're going to have objectives the market's trying to do, but if the right news event or something comes along, it's going to push for that to happen. Okay? So, hold on, give me one sec, guys. So, yeah, that'll pretty much kind of sum up everything. We'll definitely connect, um, on a Kosheks throughout this week. So I hope you enjoy the rest of your Father's Day. Hope you guys enjoy the rest of your weekend. I'll see you guys on the live session starting tomorrow in Spanish in the AM and then throughout the week. But until then, guys, hope you have an amazing rest of your day. And yeah, man, see you guys. Next Sunday Market Outlook will be in Colombia if we have it. So it just depends how the internet is in Colombia. That's where I'll be next Sunday. But I'll keep you guys posted, all right?